Let's take a look at this problem, which deals with classifying cash flow transactions. Okay, transaction 1. We paid a cash dividend, and we're asked to determine whether it's an operating activity, investing activity, financing activity, a non-cash transaction, and then indicate whether there's an increase or decrease or no effect on the effects of cash flow. And let me bring that one to light. If we pay a cash dividend, that's considered a financing activity, right? Because a cash dividend relates to how the business is financed, and it's financed with stockholders' investments, so we're showing the return to the stockholders. And paying of a cash dividend would be an outflow or a decrease in cash. Okay, we decrease accounts receivable. Now, hopefully you recognize accounts receivable as part of the ongoing main business, so it's going to fall under operating activity, and a decrease in accounts receivable is actually considered an increase in cash flow. And the reason is you assume everything else is held constant. If we had a change from the beginning of the period to the ending period and accounts receivable decreased, then that meant we must have collected more cash, because a decrease in accounts receivable means that somebody paid us cash decreasing their account. Okay? Increase inventory works the opposite way. So again, inventories is part of the main operation of the business, so it falls under operating activities. And an increase in inventory must be financed with the cash of the business, or another way of saying that is, if everything else was held constant and inventory increases during the period, then it is likely that we must have used cash to pay for that increased investment in inventories. If we incur a net loss is a non-cash. Not a net loss. This relates to net loss as opposed to net income, as opposed to a loss on, say, a share of stock, in which case we would report the gross proceeds from the share elsewhere. All right, but a net loss is just like net income. It's the first line that appears on the cash flow statement under our operating activities, and a net loss represents a decrease in cash flows. Let's take a look at the next one. We declare and we issue a stock dividend, and in this case it's a non-cash dividend because the declaration itself is simply a bookkeeping entry. It isn't until we pay the dividend that there's a cash flow effect. Now, if we retire long-term debt has to do with how the organization is financed, right? So it falls under financing activity. And if we retire the debt, that means we must have used our own cash to pay the debt holders. So that represents a decrease in cash. Next, we sold available for sale securities. So we've got some securities that are highly liquid, and we sell it at a loss. Okay, now this is interesting. Because we actually sold the securities, we're going to get proceeds from it. That's why it's an increase. The actual loss itself flows into net income, so that's the operating activity. But the fact that the securities were held as an investment means that it falls under the investing activity as well. If we issue stock for equipment, we have no cash. It's a non-cash activity because we gave somebody stock in our company in exchange for equipment, and it has no impact on the cash flows. Number 9, we decrease prepaid insurance. A decrease in insurance is the same thing as a decrease in accounts receivable. Prepaid insurance relates to the main operating activities of the business, so it goes under operating activities. And the decrease in prepaid insurance means that we liquidated insurance. We didn't have to reinvest cash in prepaid insurance. I said that incorrectly. If we decreased prepaid insurance. I believe that's an error, by the way. I think this belongs here. Prepaid insurance, I think, is an increase, and let me explain why. It's no different than inventory. If we decrease accounts receivable, it means that we decreased an investment and obtained cash. I'm going to move that. That looks like an author's error, in my opinion. We purchased the treasury stock with cash. All right, treasury stock is a financing activity, right? And we used our own cash, so that represents an outflow. Retired a fully depreciated truck with no gain or loss. Well, hopefully you understand that we make a bookkeeping entry here. There's no impact on cash. Okay? All we're doing is debiting accumulated depreciation to take it off the books, and we are crediting the property, plant, and equipment, or gross assets, and it's merely a bookkeeping entry. There's no cash exchanging hands. Increasing interest payable. Okay, we're increasing a liability. Now, because it's a current liability, the assumption is the interest payable relates to the ongoing main operation, so it's an operating activity, just like all working capital accounts. And an increase in a liability has they're saying it has a decreased effect on cash flow, but that's not true. An increase in a current liability, assuming that everything else is held constant, is just like increasing accounts payable. Again, I think the authors have this in the wrong area. If we're preparing a cash flow statement using the indirect method, then increase in assets represent decreases in cash flow, and increases in liabilities represent increases. And the reasoning is, if nothing else changed during the period, if interest payable increased, that meant you held on to your money a little bit longer. You can think of it as your debt holders that would receive the interest payable are actually financing you to support this growth in the interest payable account. Okay, decreased dividends receivable on investment. So we go down to the next line. A decrease in dividends receivable means we have a decrease in assets. A decrease in dividends receivable on an investment. It's the receivable itself that we're concerned with, and that relates to an operating activity. And again, I think the authors have this wrong. I think the decrease in dividends receivable flows through as a decrease. Oh, I'm sorry. No, they have that right. I read that incorrectly. If we decrease the dividends receivable, then that means we paid out less in dividends, so we did have an increase in cash. All right. If we sell treasury stock, treasury stock is an investment. Even though it's an investment in our own stock, it shows up under financing activities, and we would receive cash proceeds, so that's an increase. Okay, increase in income tax payable. Now, we've been through a couple liabilities. I expect to see this as an increase in cash flow. Again, I think our authors have that wrong, and it's an impact on operating activities. Okay, the act of the increase, let me take that out of there, increasing any short-term liability means that somebody else is funding us, if you will. And that change means we've had a net increase in cash, assuming we're putting together an income statement using the indirect method. Okay, transferring cash to a money market account. We'll take a look at this one. And it's non-cash. All we're doing is moving cash from one pocket to the other, if you will. There's no increase. There may be an increase in the cash account. A decrease in the cash account, but it's offset by an increase in the money market account, so there's no effect on that transaction. And also, if we purchase land and building with a mortgage with no money down, we're going to have no effect on cash, and that also is a non-cash transaction. And the one little exclamation point on number 16, transferring cash to a money market account, the important note is that you recognize that the money market account is a cash equivalent, and we normally define cash as being cash and cash equivalents. Okay, and that's problem 5, everyone. Thank you.